A group of 20 developers just sounded the alarm on something that could shake Bitcoin's security to its core. AI has handed attackers a skeleton key to find vulnerabilities no one thought existed, and this squad is racing to get there first. We're getting into that, plus a crypto exchange that refuses to stay dead, a gaming network exploit, and a regulatory fight in Brussels that DeFi is about to feel. Let's go. What is up, everyone? Welcome back to Vishmaster Crypto Daily, your daily edge in the markets. I'm your host. It is August 23rd, 2026, and we have a packed show. Today we're covering that AI-powered Bitcoin security threat, Bitmart's zombie comeback, the sandbox bridge exploit, why tokenized stocks might be walking into a 60-year-old Wall Street trap, and Micah coming for DeFi vaults. Stay until the end because that last one has teeth. Let's get into it. Alright, lead story. And this one matters whether you're a holder, a builder, or a trader. A group of roughly 20 developers has organized specifically to scan the Bitcoin ecosystem for vulnerabilities that AI models could find and exploit before attackers do. Think of them as a proactive red team running the same tools a motivated hacker would run, but with the goal of patching holes instead of exploiting them. Here is why this is urgent right now. We are at an inflection point where a well-resourced attacker used to mean a nation-state or a sophisticated criminal organization. Today it means anyone with a powerful language model and a few $100s. These tools can read open-source code, understand context, identify edge cases, and flag exploitable patterns at machine speed. Bitcoin's open-source nature is its greatest strength, but it also means the entire codebase is sitting there, publicly readable, ready to be fed into an AI that will methodically hunt for weaknesses. This group is trying to be first. And this connects directly to a story out of Microsoft this week. They patched a critical vulnerability in Entra ID, their identity platform, that scored a perfect 10 on the CVS vulnerability severity scale. A perfect 10. The highest possible score. Microsoft says they caught it internally and patched it before publishing the CV, and there's no evidence it was ever exploited in the wild. That's the best-case scenario. The lesson for the Bitcoin ecosystem and the broader crypto space is exactly what this developer group is building toward. Proactive beats reactive every single time. Find it yourself before someone else does. Now let's talk Bitmart because this situation has a lot of traders scratching their heads. A few weeks ago, Bitmart announced it was shutting down. Done, finished, closing up shop. And now, apparently not so fast. The exchange is weighing a partial restart and has brought in White and Case as restructuring counsel. White and Case is not a small-time firm. These are heavy-hitting restructuring specialists, and a detailed roadmap is expected by September 9th. So, what does this mean if you have funds stuck on Bitmart? Do not celebrate yet. A partial restart is not a full recovery. The phrase creditor payouts appearing alongside partial restart tells you something important about the math here. This is more likely a controlled wind down with some service restoration to facilitate withdrawals than a genuine long-term revival. Watch September 9th closely. If the roadmap looks credible with clear timelines and liquidity disclosures, good. If it's vague and pushes dates further out, that's your signal this is a long and messy process. And while everyone was watching Bitmart's drama unfold over the past few weeks, our fleet over at Vishmaster was quietly running same-day arbitrage between the larger liquid venues. No exchange exposure. Positions closed by end of session. That's how you stay clean when counterparty risk gets ugly. Moving to the sandbox and yes, another bridge exploit, this time on Base and BNB chain. The Web3 gaming network disabled bridging on both networks after catching an exploit in progress and told users directly, do not trade sand on Base or BNB right now. The stated impact was under 0.01% of total sand supply, so relatively contained by the numbers. But here's what the number doesn't capture. Bridge exploits are never just about the size of the initial hit. They are about confidence. Every time a bridge gets exploited, another wave of regular users mentally files crypto infrastructure under too risky and stops paying attention. The sandbox team moved quickly to isolate the affected networks, which is the right response, but the question you should be asking is how did this happen, and has the underlying vector been fully closed? Watch for a post-mortem. A detailed technical breakdown means the team is taking it seriously. If they go quiet after the all clear, that's a red flag worth tracking. Here's a story for everyone watching the real-world asset tokenization space, which at this point should be all of you. Fairmint CEO Joris Delanu published a warning this week that isn't getting the attention it deserves. His argument is that tokenized stocks risk recreating Wall Street's 1960s paper crisis. Quick history, because this is genuinely interesting. In the 1960s, trading volumes on the New York Stock Exchange grew so fast that the physical paper certificates created a processing backlog that became a genuine crisis. They had to close the market one day a week just to catch up on paperwork. The system buckled under its own success. Delanu's point is that tokenized stocks could hit the same structural wall, not because of paper, but because of fragmented systems and incompatible standards. You've got different blockchains, different smart contract implementations, different issuance platforms, and they don't talk to each other cleanly. At scale, that fragmentation becomes a settlement risk. This is worth internalizing if you're allocating to tokenized RWA projects. The technology is real, the demand is real, the institutional interest is real. But the infrastructure rails need standardization before this scales cleanly. Whoever wins the standards game in this space is going to matter enormously. And finally, Brussels is taking aim at DeFi. MiCA, the European crypto regulatory framework, is now under review to determine whether crypto lending and DeFi vaults fall within its scope. Here is the fundamental problem regulators are running into. MiCA was designed for entities, for companies with names and addresses and CEOs you can hold accountable. A DeFi lending vault doesn't have a CEO. It doesn't have a registered office in Amsterdam. The smart contract runs itself. So, who exactly do you regulate? The developer who deployed it 3 years ago and has had no ongoing control since? The liquidity providers who deposited assets? The DAO token holders who voted on risk parameters? Brussels does not have a clean answer to that question yet, and honestly, that ambiguity is a short-term buffer for DeFi. Regulatory uncertainty creates breathing room. But do not mistake a delayed framework for no framework. The direction of travel is clear. They want visibility into these flows, and eventually they will construct a framework that reaches into DeFi even if it's imperfect and somewhat arbitrary. If you are running liquidity in DeFi protocols accessible to European users, start thinking now about what a MiCA-adjacent world looks like for those positions. Oh, and one more data point worth dropping here because it's relevant to how all of us consume crypto information. Pew Research just published a study where they scanned nearly 500,000 web pages and found that roughly a third of the web content published after ChatGPT launched is AI-generated. A third. That includes a lot of the crypto news, the project blogs, the social posts that move retail sentiment. Keep that in mind when you're filtering signal from noise. The information environment has changed. That's your edge for August 23rd. If this breakdown sharpened your thinking today, hit subscribe. We do this every single day. Deeper analysis, fleet performance, and live signals are at Vishmaster.live. Drop your questions in the comments. I read everyone. See you tomorrow.